How's it going, guys? It's Andy. In today's video, I'm going to be talking about dividends. What are dividends and the best companies to invest in to receive dividends? So a dividend is a distribution of a company's earnings to its shareholders decided by the board of directors. They are payments made by publicly listed companies as a reward to investors for putting their money into a venture. Announcements of a dividend payout are generally accompanied by an increase or decrease in a company's share price. Larger, more profitable companies with more predictable profit streams are generally the best dividend payers. One thing to note is that dividends are not a guaranteed source of income. A company may decide to change the amount of dividend it pays to its shareholders, thereby impacting its dividend payout ratio, dividend yield, which I'll explain further on in the video. Companies in the following sector are observed to be making more regular dividend payouts. These include basic materials, oil and gas, banks and financial, healthcare and pharmaceuticals, and utilities. Startups and other high-growth companies such as biotech and technology may not offer dividend payments because a lot of the company's expenditures are used in research and development and other startup costs. The company may simply not have enough cash to pay its shareholders a dividend and may rather invest the cash into other profitable ventures. One important date to remember when receiving dividends is the ex-dividend date. This is the date that the eligibility to receive a dividend expires. For example, if the ex-dividend date is on the 5th of May, investors who purchase the stock after the 5th of May may not receive a dividend. However, investors who purchase the stock before the 5th of May, say the 2nd of May, are eligible to receive the dividend. The dividend yield is calculated as the annual dividend payment divided by the share price. A higher dividend yield may mean that you may receive more dividends for the amount of money that you put in, therefore a higher return on investment. However, a high dividend yield may not necessarily be a good thing. The company may be operating in a declining industry, which may mean that the share price could fall in the future and the amount of dividends that the company pays could also fall. Examples include the tobacco industry and the oil and gas industry. Guys, if you like this content, don't forget to hit the like button and subscribe to my channel for future updates. Please note, I'm not a financial advisor, so the information I give you today should not be perceived as strictly accurate. It's based on my own research and the knowledge I've built in from many years of studying finance and practicing it. Now that you know what dividends are, moving on to the companies that I think offer the best opportunities to receive dividend payments. Consumer products manufacturer Procter Gamble has increased its dividend for an astonishing 64 consecutive years. It owns an impressive portfolio of consumer product brands, including Pampers, Downy, Tide, Chairman, Gillette, Head & Shoulders and Crest, just to name a few. Not only do these brands give Procter Gamble pricing power over rivals, but most of their products are items people need, no matter what the economy is doing. The current dividend yield is 2.58%. The next company I want to talk about is CocaCola. CocaCola has been around for a long time and it's managed to increase its dividend for an astonishing 59 consecutive years. Now the company may be on track for a long and slow decline in industry as people want to consume less sugary drinks. There is a lot more to Coke that meets the eye. For example, the company owns brands such as Dasani, Smart Water, Minute Maid Juices, Simply Juices, Honest Tea, Powerade, Vitamin Water, and many more. The dividend yield for Coke averages around 3.2%. Next on my list is a real estate investment trust. Now, a real estate investment trust, or a REIT, is a great way to have exposure to property without actually owning your own property. So these trusts invest in single owner occupied properties. Most of the tenants operate recession-resistant businesses like drugstores, dollar stores, and convenience stores, and they all sign long-term leases with gradual rent increases built in. Before I talk about the other two companies on my list, I want to talk briefly about what I think about dividend companies in general. I think dividend companies are great for investors with a long-term investment view. They may not necessarily want to sell their stock and are happy to receive a regular source of dividend on a periodic basis. For investors who are more concerned with increasing their initial investment in a shorter space of time, may not want to invest too much of their portfolio into dividend companies but rather focus more on growth companies. However, I think it's important to have a balanced portfolio. As I'm still relatively young, I'm more prepared to take a risk, so not much of my portfolio is invested in dividend companies at the moment. However, as I grow older and I want more stable cash flow, I will invest more into dividend companies. The next company on my list is Johnson & Johnson. Like Procter & Gamble, Johnson & Johnson focuses on making products that people need. It owns an excellent portfolio of brands focusing primarily on the healthcare space. The company has been able to increase its dividend for an astonishing 58 consecutive years. The last company on my list is a company called Target. Now, this is an American corporation focusing on the retail sector. This company has been able to grow its dividend for 49 consecutive years. During times of recession, the company may suffer losses from, say, its electronic business, but overall, the company is well insulated in tough times and can provide a great investment opportunity to receive stable cash flows. The dividend yield averages around 3.4%. In today's videos, I failed to mention quite a few great companies. The companies on my list, however, have been offering consecutive dividend growth for a long time. I can see these companies offering dividends for the foreseeable future, so investors can be assured that their cash is safe and they'll be receiving stable incomes for the foreseeable future. Thank you all for listening, guys. Don't forget to hit the like and subscribe button if you learned something from today's video. My aim is to educate the population about finance and investing in general, as I feel that people don't know enough about this topic and everyone can achieve great returns and build long-term sustainable wealth if they invest now and take the initiative. Thank you guys all for watching. I'll see you next time.